Nissan's credit rating was already junk, and it's just been downgraded again. This is actually alarming news for Nissan. It means that things are worse than what people expect. And investors, well, if you're not already out, you need to get out immediately. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. And here is what's happening with Nissan, right? Today, well, we've seen S&P Global Ratings downgrade Nissan again, dropping the company's credit rating from BB, which is considered junk, to BB minus, which is considered double junk, and giving the company a negative outlook. This is extremely serious. BB means Nissan's debt is now officially very high risk. Investors pay attention to this. Nissan's been trying to raise funds from investors. Investors are going to probably see this and go, yeah, I think I'll pass. At least the smart ones anyway. Automakers don't get downgraded like this unless things are going very wrong. And in Nissan's case, they are. Let's break this down. S&P didn't just lower Nissan's rating, they lowered the ratings of all Nissan's overseas subsidiaries as well. BB minus rating means Nissan is considered highly speculative. Borrowing now costs them more. Their borrowing costs are already the highest in the industry. Their debt is riskier. Their profit recovery is weaker than expected. And a negative outlook means S&P expects Nissan's situation to further deteriorate. Things are not getting better anytime soon. There's been all this news, right, from the global automotive media and the media as well, saying Nissan's recovery is on track. Guess what? Credit ratings agencies say that is a complete lie. It's all a bunch of bullshit. Nissan's basically paying the right people to tell you what they want you to hear. This is not a small warning. The S&P is saying we don't believe Nissan's turnaround plan is working. So, tariff costs. This is the big one for Nissan, and it's entirely Nissan's own fault. S&P says high tariff costs are a major headwind. Why? Well, Nissan failed to localize production and supply chains in response to geopolitical trade tensions. Other companies, BMW, Tesla, Hyundai, even some Chinese automakers, they shifted manufacturing. They built local factories, they adapted, or at least they figured things out. Nissan didn't do that. So now Nissan is paying millions of dollars in duties every quarter, especially in the United States. They can't absorb the costs, they can't raise prices without losing customers. S&P is basically saying Nissan misread global politics and now it's paying the price. Now, failure number 2. S&P said this, a challenging competitive landscape. This is S&P using polite words for everyone else is eating Nissan's lunch. Nissan's portfolio is lagging behind both Chinese EV makers and legacy rivals who moved faster. In China, Nissan's largest market, BYD, Geely, Chang'an, GAC, SAIC, and dozens of others have made Nissan irrelevant. Nissan used to be, right, at one point in time, either first or second largest automaker in China. In Southeast Asia, the region Nissan once dominated, Chinese EVs and hybrids, they're storming the market. In the US, tariffs are crippling prices and Nissan lacks competitive new models. Nissan isn't selling enough profitable vehicles. Competition is passing them at high speed. If Nissan wants to sell more EVs, it can, but it's not making any profit on those cars. In fact, analysts believe it's making a loss. S&P is basically saying Nissan has lost momentum in almost every major market across the world. Failure 3 from Nissan, rising expenses under inflationary pressures. Inflation hits everyone. But S&P says Nissan is handling it worse than its competitors. And this means their operational efficiency is shrinking. They've just sold their headquarters to raise cash, but now they've got to rent those headquarters. They can't offset rising costs of materials and logistics. Their factories are not optimized. They're running a less efficient ship. This is what happens when a company gets stuck with old platforms, which I've been talking about for years, and slow product cycles. Costs go up, but profits don't. S&P's message is quite blunt. Nissan is less efficient, less agile, and less capable of absorbing inflation than its rivals are. Now, the Chinese E factor is also a big problem for them. Behind all of this is one unavoidable reality. Chinese EVs are destroying Nissan's market share. In every major market, Nissan relies on Southeast Asia, China, Europe, Australia, even South America. Chinese automakers are offering more features, lower prices, fast innovation cycles, better range, faster charging speeds, better tech, better electrified powertrains. Nissan used to be a pioneer with the Nissan Leaf more than a decade ago. Now in 2025, it's a follower and a slow one. S&P is essentially acknowledging that Nissan is not positioned to compete in the new EV-dominated world. But then, Nissan are not alone there. There's plenty of other automakers you could say the same thing for as well. So tariffs making everything worse, and this is part of Nissan's cost crunch problems right now. The tariffs imposed by the US have been devastating. Even though the tariff dropped from 27.5% to 15%, Nissan is still losing millions due to this single issue alone, actually. The yen deflation, that helped them a little bit, but not enough. Nissan simply did not prepare for a world where trade barriers would shift overnight. S&P saw this failure very clearly. So what happens next? Well, S&P's negative outlook means another downgrade is possible and likely if this happens. Nissan sales continue shrinking. New EV models don't arrive in time with enough competitive features and at competitive prices, which seems unlikely. Competition intensifies, which seems very likely. Profit recovery slows further, also likely. Renault's partnership weakens, probably also likely. The company can't cut costs fast enough. Nissan once led the world in electrification. Isn't it crazy to say that? It was the first company in the world to sell 500,000 electric cars. Now, it's drowning in tariffs, losing market share to China, and it's bleeding profits, selling its own headquarters and renting them back. This downgrade is far more than a ratings update. It's a global warning siren. So there you have it, guys. 3 major failures that Nissan are facing and why S&P believes their situation is going to get worse before it gets better, if it ever gets better. What do you guys think? Can Nissan pull off a turnaround? It would be quite miraculous at this stage. Or is this the beginning of a slow, painful decline before they inevitably go bankrupt? Let me know in the comments. Thanks for watching. Stay safe. I'll see you in the next video. Bye-bye.